beautiful tax bill, which includes qualified business income deduction. Okay, so what is the qualified business income deduction? Well, the qualified business income deduction is a pass through deduction that you get off the top. Okay, so if you made a certain amount of money as a pass-through entity, meaning a S corp, a LLC, or a sole proprietorship, that means your income. If you're not a specified service business, if you're not a specified service trade that is on the list of non-qualifieds, then you get this deduction. Okay, so you have to make sure you check to make sure that you are qualified for this list. And then the rules are so interesting that, just make sure that you're definitely qualified and you can get this deduction, because this is not one of those deductions you want to leave on the table. Okay, this could save you thousands of dollars. All right, let's get into it. So if you grossed about, let's say, $100,000, before, the deduction amount was 20% of your income, but now it's been changed to 23% of your income. So that means you would get up to $23,000 in deduction, and then you could also take your other deductions of your net. So this is a wonderful, wonderful change to this to the QBI. And this is definitely something that you can definitely take to save yourself some money. Okay, so that is one of the changes, and this change is going to be a permanent change. Okay, so they're doing this to help with the inflation, and maybe, to make sure that these small business are also considered, because when they did the first Tax Cut and Jobs Act bill, we didn't get much. Hey, Mahmoud, Momed, how you doing tonight? Hi. So this is definitely something that you could make sure that you talk to your tax professional about. Hey, Layla, hi. And make sure that you take this deduction, because this could be thousands of dollars that you will be saving. Okay. Another one of the permanent changes is going to be to the estate and gift taxes exemption. Okay, before it was about, I think it was a lifetime limitation of 7 million, but now it's been raised up to 15 million lifetime limitation. So that means you can give to whoever you want to give to up to $7 million in your lifetime without having to pay taxes on that gift or the gift transfer. Okay. Another one of the extension that had a limitation, which was the qualified residential interest. Hi, Momed. Hi, Momed. How you doing? The qualified residential interest. Now that also has been changed. Okay, the new provision for that is now for the first 750 for the first 750,000 in your home acquisition debt. You can definitely get those deductions. So before, they had changed to say that they will not, you can't take the interest on that, but now you can go back and take the interest. Okay. So the casualty loss deduction, they allow it now. Okay, that's now allowed for personal casualty resulting in, it has to be federally declared casualty loss. Okay. And then we have the limitations on the itemized deduction. Now, for the itemized deduction, you can get up to 37 cents on certain deductions, such as, uh, your marginal deduction is about 37%, really, 37%. So that's it for the permanent changes. Actually, I miss circle. I'm not sure what circle is, Layla. And I don't know what Mohammed is talking about, but let's move on. We're talking about taxes here. We're not talking about whatever they're talking about. Okay, so if you need some clarification on any of the things that we talked about tonight, you can always DM me or message me, and we can definitely have a consultation about some of these changes. Okay, um, the moving expense. Moving expense is an extension in the limitation. Hi, Isdro, Isadore, Thomas. You need to what? You need to shut up sometimes. Why would I shut up when I'm talking to you about taxes? Okay? We're talking about taxes here. Anyway, the deduction for moving expense. You can have, that's beginning in 2025. Okay? We are set to return to the old ways for 2025 for that exclusion. So you can, it's been permanently eliminated. So you don't get that deduction anymore. Okay? Hi, Payne. How you doing? Um, so let's talk about the ABLE account. Payne is 9 years old. Okay, Payne. Well, I'm glad you're learning about taxes at 9 years old. You're doing better than most people. Taxes is one of the most important thing to learn to keep wealth. Lots of business owners do not prepare themselves to pay their taxes at the end of the year. You're doing a great deed, Payne, by coming in to listen to this at 9 years old. Maybe you could teach other people. Hi, Travis. Okay, so let's see. Yes, let's talk about the ABLE account. So the ABLE account was an additional contribution, achieving a better life. It was an account set up so that you could have something to save later on in life for the children. You could set it up for somebody who's 9 years old. And what would you like to do with that $37, Payne? Make sure you use it to make some more money, okay? All right. So this provision is permanently allowing additional contribution to the ABLE account, okay? The ABLE account is the Achieving a Better Life Experience account. So you can contribute more money. Very good, Payne. You should invest your money. And maybe you could invest it in something like a stock or something like that, okay? Start young. Start while you're young. Okay. This account now is permanently allowed to be a tax-free rollover. This is good for, you should talk to your parents about the 529 qualified tuition account, which is also considered like a ABLE account. Okay. This will help them to save some money for you before you go to college. Okay. Can you imagine? This is crazy that we're on here with young people who are listening to save money for their future. I guess there's a reason for me to be on here. Whether it's reaching the adults or reaching the children, at least you're getting the knowledge so that you can become financially wealthy. Okay? All right. So, let's see, what else is there that we should talk about tonight? Uh, oh, what we did not talk about before. This is for working people though. There is no tax on tips. And that's a new provision. No tax on tips. This is to help the working families to get a relief. Okay? Working family to get a relief. Enhanced deductions for senior. The deduction is going to be enhanced to $4,000 for the seniors, and and it you can't exceed $75,000 of earnings. Okay. Um, so this provision creates and then there is the new no tax on car loan interest. Okay, so this provision provides a line deduction up to $10,000 for qualified passenger vehicles. That you can take up to $10,000 deduction. Thank you, Payne. You've been such a good sport. Thank you. $10,000 deduction. Okay. Um, And that's pretty good. So that means that you can take deductions if you get a car, you can now take the interest on the deduction. Okay. All right. So that's going to be it for today. Tomorrow we'll go over something else from this qualified, this big, beautiful, the big, beautiful tax bill. Okay. All right. Have a good night, everyone. And I'll see y'all tomorrow.